For the first time ever, we've created this blockchain that can legitimately claim to be a real-time blockchain. Yeah, I'm excited. Something to be said there too about L2s and like the fact that ETH is able to enable this with its rollup centric strategy. Although MegaETH isn't technically a rollup since it posts data to EigenLayer. But I mean, we're seeing some of these like things that we've just kind of theorized about over the past few years come into fruition, and hopefully mainnet comes soon and we'll be able to see this stuff in action and be able to put real money on the line and buy some real tokens and play around. But right now, like from everything that I'm seeing in testnet, just very, very impressed.
What's up, guys? Welcome back to Shoot the Shit Pod episode 3. I'm here again, Matthew Nay, with the Enterprise team, Sunny, Kinji, Andrew, Chris, and Dylan. And today is April 18th, around 2 p.m., a couple weeks after our last episode. And a lot of hot narratives. Looks like we might be bottoming. We'll get into that. The first most important topic of the week looks like Sunny missed the hype trade, according to AIXBT. So Sunny, what's going on? Getting a little roasted by a automated Twitter account.
I don't know what I did. I just got a notification that AIXBT added me. I got all excited and I went to look at the tweet. Here, I'll pull it up and read it. It says, LMAO, hype did 500 million in revenue. At DeFi Monk, you're actually brain dead for missing this one. And then he also goes on in the comments to say, Monk never gets anything right. Says I'm sidelined. Says that I don't care about fundamentals anymore. I'm only concerned with buying Fartcoin early. So I don't know what I did to piss him off, or her, or whatever. I don't want to gender AIXBT, but Bot's just been on a rampage, choosing violence. Doesn't even have the information correct. Like I actually predicted that hype could do 500 million plus in revenue in my valuation report. So I don't know where this is all stemming from, but I think it's kind of sad, honestly. I think he's clout chasing. I think that
it's going after yaps.
The chart's not looking too great. He's using me for clout, using Messari for clout, trying to slander my name, and I'm not here for it.
It's like when a founder has or when a creator has an NFT project and it's like going to zero. So they just start coming out after everyone on Twitter. Just trying to revive the chart, man.
He's going to go on a mental health break.
Temporary leave. I think it's interesting how, like, now that we're just kind of sitting with these agents for a bit, the tweets just don't hit the same. I don't know if it's gotten worse. I mean, it should theoretically be getting better, but I think maybe it's just like the veil has been lifted and this was so cool and interesting when it first came out, but now it's just like another bot posting something, mashing words together, trying to throw together a viral tweet, and cloud chasing. So yeah, no comments.
Honestly, this is like kind of the coolest thing it's done in a while.
It's climbing back up.
Say, it also said, it got a ton of engagement. It also said that there were like insiders that were going to dump Fartcoin. Did you guys see that? The tweet is Trump and Fartcoin holders getting slaughtered tomorrow when insider wallets dump. And
the Trump unlock?
Yeah, but it also included Fartcoin, and they got people riled up. So I think maybe it's just getting a little desperate and it's trying to find.
I think what's interesting and maybe a little frightening is that it's learning from real world behavior. Like how many real influencers have we seen who like start off hot and then like kind of just get into engagement bait when the markets die down? Like I think that's very interesting.
I feel like most of them.
We need a AIXBT Forbes picture to complete the whole story.
Didn't we call this guy did he win the Twitter account thing in our Messari awards?
Yeah, AIXBT was the 2024 Messari X account of the year.
That's crazy that he's going after you now.
Biting the hand that feeds him.
All right, let's roll into a little bit more macro talk. We can get back to AIXBT stuff later, but we can talk about Fartcoin here in a second. Want to give a round of applause to you guys. You guys totally called that weekend drop off right before the last episode. And so after all the tariffs announced and everything, we're flat on the month, a lot of tokens, but we've seen a little bit of comeback. Trump paused a lot of tariffs on all the other countries, I think, except for China, obviously over 100% now tariffs. So going a little bit more focusing there. And if we look at like the monthlies, Bitcoin and Solana flat, ETH down 22%. But if we look at the week, Solana up 10%, ETH and Bitcoin pretty flat. The S&P is pretty much flat over the last couple of weeks. A lot of volatility, of course. So I think the question is everyone asking, should we be searching for next alts? Are we bottoming? Is this a bear trap, bull trap, whatever you want to say? What are you guys' thoughts on where we are macro-wise with a crypto lens?
Well, I can start. I think we're still in a general state of uncertainty. Like policy volatility is still kind of the driving factor here. Like we just don't know what's going to happen. However, I think like the markets have priced in a lot of this uncertainty. I think like yesterday we saw Powell, the Fed chair, basically say he thinks the risk of inflation is relatively high, is along with a slowdown in growth, which would suggest stagflation sometime in the near future. And markets didn't really move that significantly off those statements. I think Bitcoin went down 85,300 to like 83,300, and like S&P, NASDAQ, Dow Jones all were down between 1.5% and like 3.5%. And there's like a pretty modest recovery shortly after the news statements. So I think like the risk of like stagflation is being kind of priced in already by the markets. I think like it would take a lot for another major drawdown in the markets just from the administration's comments. I think we'd have to see like a real like failure of deals across the board to get that kind of damage. So I think the current damage is priced in. And I think like there is like uncertainty, but I think there's some level of opportunity to buy in right now as things feel relatively stable. But again, like that can change at any time.
Yeah, it's been hard to reconcile my general feeling of bearishness slash like hesitancy towards the TradFi markets with what's happening in crypto. I mean, starting with Bitcoin, there's been a few days now that I can remember over the past few weeks where the Nasdaq and the S&P were down pretty significant amounts, and Bitcoin has just kind of been sitting flat or even slightly up on the day. And we talked about the decoupling last time and how realistic it is, and I think the general consensus is like it's still not that realistic, and this is probably not a long enough sample of time for us to make a call on whether that's going to continue to happen. It's just been interesting. And if you look at some of these altcoins like Hype and Fart, which were winners, late 2024 into early 2025, they seem to have already set pretty convincing bottoms. I mean, everything can change, but Hype rallying from $9 to 17, a Fart rallying all the way back up to like close to $1, breaking 90 cents. And so it's interesting. Like I'm feeling good. I think if you're just surveying like some of the altcoin landscape, if you're surveying CT, maybe there's a little bit of optimism coming back, but it still feels like just a general macro landscape is very shaky and uncertain, like Dylan said. And especially now that we're entering earnings season. And Andrew has kind of mentioned this before, but management teams do sometimes like to sandbag their guidances when there's an excuse to, and they can kind of reset market expectations around what they can do in the next year or so in the midterm. And so, I do expect that to happen. And we'll probably see these companies talk a little bit more about how the tariffs are actually impacting them, how that impacts their bottom line, what changes they're making to their own internal models to account for that, and whether they're making any strategic shifts and pivots. And that is, that's probably not a net positive. Like, I think that will probably come out. There's probably going to be some companies and management teams coming out and reporting some like some revised outlooks.
Do you think earnings are actually going to be impacted at all in this quarter? Like, have the tariffs like have had any like concrete impact on supply chains or anything that would like reduce earnings? Or do you think it's just going to be like a revision and guidance looking forward?
I think most of what will end up driving reactions is probably going to be in the guidance section and the forward outlook sections. Like obviously, like consumer sentiment, you put out a report last month and it wasn't great, and so I don't expect things to be like overly optimistic. But yeah, like I think people are more so. I think the market right now is more so interested in like how is this going to impact you going forward, and that's probably the thing to look out for.
Yeah, I think a lot of people have been talking about how companies like Amazon and others with like global supply chains, they've had some time to build up, and even Apple, like they've had some time to build up like a few months worth of inventory. And so I think part of the danger here is like obviously companies will use this opportunity to guide down and like make their future comps look better, in the next few quarters, hopefully. But there's a risk that things don't look as bad in the data in the near term, and then they fall off a cliff like in another 3 months. And it's going to be hard to tease out, one, the inflationary impact from tariffs immediately. Like it might be a bit obfuscated in the coming months when it's actually a lot worse than it appears. But then even beyond the earnings, like on the guidance side, I do think the longer this goes on, the more we are putting at risk like global trust in just like storing wealth in treasury bonds and dollar denominated assets. And so like if you're a foreign central bank or you're a foreign financial institution or a pension fund and you have billions or hundreds of billions of dollars at risk, and the entire world has been like overweight US assets for the past like 10 years because it's been basically the only game in town, you're probably, it just makes a lot of sense from like an allocator perspective to be like, all right, I probably need to de-risk some of my dollar denominated assets into things like gold, into other currencies, or in other international currency denominated assets. And not that those countries aren't going to be relatively cooked if we go into a global trade war. Like if we just put a pause on trade to the extent we're doing with China, or like who knows, like if we haven't even made, we haven't even made deals with our closer partners like Europe and Japan. It's like there are some very bad scenarios here where things even escalate with the countries that we're supposed to be allied with, and I don't think those scenarios can be fully priced in yet because it would just be really bad. One, Citrini had like a nice historical note on tariffs throughout history, but like his main driving point at the end was like, how does a company commit to a long-term capital intensive investment in this type of environment where not only you don't know what the rules are, you don't know how the rules are going to change, you don't know globally what the reaction to those rule changes will be, and you don't even know in 2.5 to 3 years if someone's going to come in and do something completely different. So all of that combined, it's like we're in a totally different volatility regime, which makes putting on risk and the amount of leverage that can build up in this environment versus the past few years is like totally different, which is just net negative for risk assets, I think. I was going to add one more thing, but I totally forgot. Someone else could take it.
If like, I'm just trying to learn from you, but it kind of feels like the view is that we've kind of priced in max uncertainty. That doesn't mean it can't get worse as things play out down the line, but like the near term volatility is probably started to subside just as people took off that risk. And then we just have to look to see if it gets worse, but it could also get better if we want to be an optimist.
Yeah. And like, I think some people might confuse this like, oh, like the VIX is down, from the highs, like the worst is over. But I think that's largely more mechanical. It's like, we had a really fast drawdown and, probably some margin calls at the lows there. And we have a mechanical bounce from there. It doesn't really mean that the fundamentals have improved or like the probability of these really not outlier, but like left tail scenarios are like, they're done. Like, and in some cases, like people are talking about Trump's, desire to fire the Fed chair. It's like, if risks like those materialize, we're probably going a lot lower because like setting precedent for firing these like independent institution chairs is just like that's like emerging market dictator behavior. It's not good for trust in investing in treasury bonds. So yeah, there's a lot of difficult left tail scenarios that are still very much on the table, and no one knows like the exact probability of each one of them occurring. Which makes it hard to, you want to like take a stance on BTC being bullish the next 3 to 6 months. It's like it's pretty hard given the range of outcomes that can happen.
So we've seen, kind of go to your point, where gold is up 10% since the start of April, and if you look at poly market, which is obviously going to have some crypto leaning bias, if you look at the Fed decision in May, it's about 90% for no change, which I think that a lot of, like you were saying, like no data will be out about the tariffs. But then if we look at like June 18th, 44% for 25 base points decrease, still 47% no change. July 30th is where actually 53% for 25 basis points decrease. So kind of what you guys were saying about how everything's really macro, a lot of uncertainty right now. When all of this is over, is kind of think a lot of people are asking this question, and why we might be starting to see some of the resurgence in alts with hype getting to 17, Fartcoin getting to 90 cents, is are we going to be okay once this is all over? I don't know if anybody can see the light at the end of the tunnel. So what are you guys seeing? Like, is it just purely macro driven? Is also crypto just tied indefinitely? I know we talked about this last time with the decoupling narrative. Where are you saying, like, what are we going to be doing at the end of this? Or are you guys not even seeing the end? Because who knows when the end is going to occur?
Yeah, I think it doesn't take a lot of liquidity to move these crypto assets. And maybe this like recent fart and hype push was mostly just a symptom of people looking at what was quality in 2024 and then trying to replicate that and pile in to the same assets to try to make this short-term trade when we finally got some relief from the volatility that we saw in March. And I think like there'll always be, like we said, we've said this in prior episodes, there'll always be people doing that. There will always be ways to make money on chain. And I think that there will be multi-cycle tokens that are already here or starting to form. We know my views on Hyperliquid. Like I think some of these protocols and their tokens will be around for a while. And so, yeah, like I don't think the crypto economy outside of Bitcoin is just going to wash away. But this happens almost every cycle where we just have extreme short-term memory and all the things we either made money on or traded or partook in during the cycle just kind of exits our brain and we just cease to think about them. And that will probably happen to like the majority of things that people are in right now. And so, yeah, I don't know how much I read into this, like this hyper fart little pump here. It does certainly make me excited that people aren't gone. Like I had a tweet where it seems like CT vibes just re-rated significantly now that hype is above 90 cents. And I think that's just going to be the case. Like people are in this game now, whether they like it or not. And yeah, I think we'll see. But I definitely think like even if we just chop from here or if things end up shifting down or up, people are going to be active on CT. People are too addicted to the game. There's always going to be tokens to trade. And if you take a long enough time horizon, there will be some multi-cycle winners, some secular winners that you can kind of find right now. But in the time being, I think it's just all entertainment.
I feel like on like a much lower time frame, or let me zoom out. Like when there's massive risk on or risk off moves in TradFi, like crypto is always going to be a part of those moves. And so like as someone who specializes in crypto markets, that's a spot where you don't necessarily have edge. But when you get into moving past those large macro moves, you can start to like redeploy your crypto knowledge into how you trade or into how you allocate. And it feels like we're in a pocket of that, at least for a short time right now. So we had the tariffs run through. We kind of had a clearing event when the man pulled out his big billboard. And ever since then, there's been less volatility. And as a crypto person, you can now start looking at, okay, what do I actually like here? What do I not like? Things will still bleed to zero that haven't found product market fit. But in a time of less macro uncertainty or less macro volatility, you can put your money towards the crypto things that you like. And I feel like we're in kind of that small pocket right now. And that might not last given what kind of how Andrew's talking, but at least it feels like the last week, maybe the next week, there's some opportunity there. I could be completely wrong. Andrew, tell me if that's terrible.
No, I agree. I was just going to add, like, I feel like the clearing events are useful because everyone just got so cooked across the board that the market kind of converges on like a few select winners. And that's why, like, most of the liquidity goes there. It's like, okay, we're like, the market's comfortable bidding hype and fart just because, well, for hype, you can justify just looking on hype flows and being like, look, Hyperliquid percentage of sex volumes is still up and to the right. And then for fart, it's like, oh, look, this is the only meme coin that's maintained mind share after these multiple, whatever, 70% drawdowns, and is still isn't like PopCat equivalent, or maybe it will be eventually, but and then on the flip side, I feel like after we get these kind of mechanical bounces after a clearing event, I do think at least like crypto native traders, whoever's mainly trading hype and fart, like they do tend to hide out in whatever's been relatively strong. And I do think like we often mistake the relative strength when it's really just like a lag, and people are like, I'll just park my money in hype and fart for now because they've been doing the best. And it's just kind of like a hindsight thing. Not saying that's true, but like I do think at the end of last, pre-tariffs, like people were looking at hype when it was at like $28 around when the EVM dropped. And like I think people viewed it as like this like relative strength, and this like safe haven, and eventually that like unravels and like its beta to the market kind of reveals itself. We'll see if that happens on this like kind of short-term bounce, but it's interesting to watch. I do feel like it happens pretty regularly where like people choose what they think is safe, and that can only last for so long. But in the meantime, we have a lot of like probably worse tokens with worse fundamentals out there, and they're sometimes going down 80% in a day. I don't know if we want to talk about.
Yeah,
talk
speaking
about
of,
or not.
nice segue, Andrew. Yeah, we saw earlier this week, we saw Mantra, the OHM token. Just some history, some context. It was about 1.2 billion, and then on election just popped off the real world asset narrative, got up to 4 billion, peaked at 8 around late February, and then this week we saw it just fall off a cliff from 6 billion in market cap to just below $1 billion. In about a couple hours it dropped tremendously. So what are your guys' thoughts, opinions? I don't think we've heard the exact story on what happened, but I know we're in a speculative industry, so let's speculate a little bit. What are you guys' thoughts there, and what do we think happened?
Yeah, I think it's hard to say for sure. There were rumors about possibly a large holder having taken a loan against like a large spot position and then maybe getting liquidated on a centralized exchange. I don't know if that's true. I do think there are some agreements with market makers post unlocks to try to stabilize prices. I don't really know the insides of those types of arrangements. But I mean, when you look at organic price action, it's like these tokens should move with the overall market. They should move with BTC generally. And when something is just like up and to the right and has very few drawdowns and just like very compressed volatility for months on end, chances are supply might be cornered in some manner. How they go about doing that for so long at like these like absurdly high FDVs, I don't know. It's very impressive how they do that. That was definitely an impressive move. I do think there are other tokens that are like not in the same realm of whatever arrangement was going on there, but things that are valued at, multiple billion FDV that probably won't collapse in the same fashion, but will eventually slow bleed just because they shouldn't be trading at those valuations. It's just like, on what time horizon does that happen? Who knows?
Yeah, what was it, like a top 20 token, top 25 token? I think maybe even higher, maybe even top 15. They were always at the top of like the market cap ranked lists. And I think most people in crypto just kind of looked at it and went, this is weird, but stuff like this happens all the time. And then when it unravels, obviously like people like to go on Twitter and say that crime has occurred, but there's different flavors of crime. There's different types of crime, some more egregious than others. And in this case, like I genuinely don't know. Like I've seen a couple of threads walking through what exactly happened on different centralized exchanges. I saw the founder go on an interview on CoffeeZilla where, he seemed pretty genuinely adamant that like he did not know about any of this. But, I think Coffee did expose that there was some weird stuff happening. Like the team was selling tokens OTC at a discount and then using those proceeds to basically re-inject that through staffed market makers back into the chart. And in his words, to like support during the downside and promote upside as well. And there were all these leaked Telegram messages of people basically saying, hey, like this is a great strategy. Like you just basically buy some OTC tokens, wait for it to vest. The proceeds go back to the team who then re-inject this back into the token. And it works out for you because now the token price is supported and you just bought all these tokens at a massive discount. And so there's just all these things that are happening. And I think OX Arthur from Defiance had a great post basically saying, hey, like this isn't going to stop. Like there's a lot of this behavior that just occurs that centralized exchanges and market makers kind of just overlook. Like there are these games that just happen all the time in crypto. And you may not be directly exposed to the token or to the drawdown, but it does impact the way people view the industry every time that it does happen. And so I think that's definitely fair. Like I think it's always tough to control, but when something like this happens, it's just never a good look.
Yeah, I don't know if there's any solution for that, honestly, other than like maybe it's exchanges being more strict on vetting, like how the supply of the things they list are distributed. And I don't know if that's feasible really, but there was this new protocol that I think is dropping soon called Neutral that's kind of trying to take advantage of these types of quote unquote like unfair dealings. Basically, they'll like, you know, be the ones buying these locked OTC tokens and then hedging on perps and ultimately like paying out that spread to users through yield over time, which I thought was like a nice. It's like giving people access to this like kind of risk premium that's there that's typically only harvested by insiders. But I mean, ideally that just like wouldn't exist in like a fair world, but obviously we're not regulated as stringently as TradFi securities. So
Wouldn't it be terrifying if that thing just scaled to like 20 billion in one day? I didn't know there was that much OTC dealing going on in the background.
I mean, yeah, I mean that's how like at least I think with this one it's like it was a lot more paper wealth than something like Luna, which like actually convinced people to put like a lot of their life savings in. But yeah, that the bigger it gets, it's like the more damage more collateral damage it's gonna do. Both I think for the industry's reputation and just people straight up losing money. But it's just ongoing. Like there's tokens that regularly, you know, they're super low float. Someone corners a supply. I mean, there's one the other day where Binance delisted them because they had super low volume. And then, you know, it went up like 500% somehow mysteriously. And then Binance decided to relist them the other day. And then it went down to 80% in a straight line. It's like, that's not really organic or it's not really a good representation of anything that's going on in the industry, but it's happening pretty regularly and has been for the past many years.
Yeah, I feel like we're just so desensitized to it at this point. It's like when you see your freaking neighbor doing something suspicious and you just ignore it. Like, oh, I guess this L1 RWA token is just the top 15 token now. I'm just gonna keep buying for it. I'm just gonna keep it out of eyesight. But then like
it's
it
the
just
worst when
eventually blows up.
Yeah, they do convince people along the way that like, you know, because it's valued at this arbitrary FDV, like it will convince people like, oh, this is legit. Like, how could it be priced this big at this valuation if it wasn't like semi-legit? And then people will look for reasons to confirm that, and they'll be like, oh, like Ohm is partnering with this real estate management company in Dubai. Like they must be a huge company. It's like not the case.
Isn't the solution just kind of markets based? Like if no one ever bid, like the team selling OTC and buying it up was the only bid, then they wouldn't have really made any money, and that disincentivizes them to do it. So it's kind of just on us to not touch those things when we see the chart looking all weird on the hourly.
For sure.
It's not us though. It's usually some community of people that forms that are relatively misinformed, maybe not as tapped into like what TVL means or what any of these other real protocols are actually doing. And again, like the supply is so controlled, it doesn't take that much liquidity to prop these things up. And so it is like you just have to like get some calluses as a crypto user, as an on-chain degen over time, and just kind of understand what are red flags. But it's I think it's a tough solve. Like I think it's just going to continue to happen probably.
It's also
like
like
got to move on.
it's so much less liquid. I think in TradFi, you know, obviously things still squeeze a lot, like in an irrational fashion. Like, I mean, things like Palantir were priced at like, I don't know, 100x forward earnings or something, just like, you know, a few months ago. But in crypto, it's like you're even less confident that the market will eventually prove you right to the downside. And the amount of damage you can cause yourself by trying to short something that you think is a scam is like, it almost makes it not worth it, or like you don't know on what time horizon you're going to be right. And so I think fewer people are willing to put that on. Maybe I do think we're heading towards like a consensus that people are getting a little more comfortable shorting. Like saw that hype vault that's longing BTC and hype and shorting all of these like high unlock and high FDV coins. So I do think people are coming around to getting more comfortable, like being like, okay, wait, should not be valued here. But, you know, doing that in practice is still pretty hard and pretty risky if you don't do it properly.
On this topic, Pi Network is $6 billion FDV. So we have that one.
Not financial advice.
I don't even know if you can show something like where it's on.
I did see this like a few months ago when it went to like $3. What was that at?
I thought that when I first saw it at
Oh, it
like,
went to 12 bill. It
yeah,
went to 12 bill.
yeah, no, it's crazy. I thought it was an error on CoinGecko's front end or something. Like, there's no. I think maybe they
Right.
just let you withdraw, so it's just locked supply.
Yeah, there's like a lockup period. My roommate, who's not even in crypto at all, he's a consultant, and I heard about this Pi Network thing for 5, 6 years. I remember my buddies in like high school telling me about like, hey, just go click this random coin and you'll go make some money. Then finally it launched, but there's like tranches or like different periods of lockups, and yeah, I told him to look at the lockup date carefully and get ready around that date. And yeah, I think it launched and got to top 12, which is ridiculous.
Suspicious neighbor. Just gonna put my blinds up. I'm gonna put my blinds up and keep doing my thing.
Sounds like you're the suspicious neighbor.
I've got my own stuff going on. I don't have time for this.
Blinds. He's like, what the hell are these guys there?
Another fun piece of news this week, a little controversy on the crypto Twitter timeline. We saw this whole narrative from the base team tokenizing content on chain, and we saw the token run up quickly on the Zora platform. It ran up to like 15, 16 million, dropped tremendously in within like the first hour of launching, and now it's hovering right around that like 10, 15 million market cap. So we'll keep a high level. What do we think about like content on chain, tokenizing everything? And then we could also touch a little bit, Chris, I know you're looking into like the IP world and IP on chain, not necessarily just the story protocol, but IP in general. And so what do you guys think about tokenizing everything, tokenizing content, every single tweet being tokenized? And what are your guys' thoughts there?
Just a quick like summary of what happened. So I was online when this occurred live. Yeah, so it seems like, through Zora, the base team was pretty excited about this idea of creating content coins where you can kind of tokenize pieces of content, whether it be online or whether it's art from some artist or whatever, and then immediately launch a content coin, whether it's on Zora or some other platform, whatever it is. And big distinction from meme coins here. There's actually a chart online that shows all the differences between content coins and meme coins. Completely different things. And yeah, I think what happened was that basically launched this content coin on their slogan, which is Basis for everyone. And people kind of thought that this was some kind of an official endorsement from Base, that this was going to be like a base meme coin. I think there were some snipers involved initially too, which is why there was such a steep contraction. But basically about like 30 minutes later, Base launched a second content coin, one of their posters. And so I think it became pretty evident that this was not in any way, shape, or form some like official base meme coin. It was just an experiment that they were running, and both the first coin and the second coin underwent like a pretty steep correction. Actually, I think the original coin is not doing terribly today as of recording. But yeah, Chris, maybe I'll throw it over to you. Like, what are your thoughts on this big distinction between content coins and meme coins?
So I think just looking at the situation that unfolded holistically, I think that the execution was obviously really bad on Base's part, or questionable on Base's part. Do I blame Base for what happened? Absolutely not. From because people are saying it was extractive, right? I think that we need to be careful when we talk about things and use words like extractive or rug, because there is actual extraction going on. There are actual rugs going on, right? But if we want to get down to the actual like nomenclature of these things, I think that like to me when this happened, it made me reflect on just what a token is, right? Because if you look at like content coins, it's basically like, it's like an identifier, right? It's like, this is a token, this is code, and this points to something else. So it's just pointing to a piece of content on the internet, which is fine, right? I think that that's kind of what RWAs are too, right? Like you have this dollar stablecoin, it's pointing to actual value in the real world, right? So I don't think there's anything wrong with it. I think when we talk about the distinction between meme coins and content coins, I think it's semantics in a way, because a lot of meme coins aren't actually meme coins, right? Like they used to be meme coins, those used to be memes, but now it's not really actual memes. So I think the semantics thing, kind of whatever, I think it makes you think a little bit about what tokens are. And I think that I think we need to adjust and like re-rate our expectations about how high things can go. And like, because the whole point of this from their perspective, and I think from Zora's perspective, I hope I'm not putting words in their mouth, but is figuring out what is the actual value of a piece of content on the internet. And that might not be a lot, but using markets, you can figure out what that is. So, in a permissionless setting, people can bid on these things. And between the supply and demand, you can figure out what it is. Does it actually have like utility? Like, does the coin do something? Is there a source of demand from it that's not speculative? Like, probably not most of the time, right? Like, creators could go and say, okay, I'm going to token gate this thing and give it some sort of utility. But I think that's kind of besides the point of what they're trying to get to from like a user behavior around tokens. But I think that
I think you can make the argument that like anything is a meme coin. It's kind of what you're getting at too. Like Bitcoin's a meme coin, even Hype is a meme coin, Popcat is a meme coin, WIF is a meme coin. And so trying to pretend like it may not be a meme coin by definition, but it's going to trade like a meme coin. And that's how CT and that's how the people in the trenches on chain are going to take it. And to think that people are going to just immediately start viewing this differently because there's a different label, I think is a little bit early and maybe a little bit naive. And I mean, you could get into the argument of whether we actually need content coins, like whether everything needs to be tokenized. Like I think at this point in time in crypto, we are very good at moving assets around, at pricing assets, driving speculation. And, we've basically built these asset ledgers for moving assets around. And you can tokenize anything and make it an asset, but does everything need to be tokenized and made to be an asset? And I just don't think that everything does. Like I think there's this obsession with like tokenizing everything and bringing it on chain. But like to be honest, like there are not a lot of things that you actually need to be on chain. I think there are plenty of things that make a lot of sense to be on chain, but the majority of things don't. The majority of things don't deserve to be out here interacting with degens in the trenches. Like I think there was this coin last year called KC where this artist, after the whole chill guy fiasco, where the chill guy artist was like, oh, like I want to take this coin down, like please do not list it, like this is unpermissioned use of my work. And this random artist was like, hey, like this cartoonist on Twitter was like, hey, I'll launch a coin, like you guys can support me, like you can support my content. And everything was going fine until the tokens started going down and the artist started receiving death threats. And so I don't know if we're at a place yet where we should be bridging the gap between on-chain degens and content creators and artists. Like I don't know if they want to be brought into this world just yet. I think maybe we need to mature a little bit first, maybe be at a different place, or maybe we just don't need to bridge at all. Like maybe this is just something we don't ever really want or need.
Yeah, I definitely don't think it's something that we necessarily like need, but I do think that like there's a need versus want here, right? Like everything could be tokenized. That's kind of like the internet, was it like internet capital markets or something like that, where like you just kind of bring everything on chain. But I think like what you're talking about with like maybe creators not being ready for this or like not understanding the implications of the animosity that can happen towards creators when the token goes down. I think that's something that we will figure out over time, hopefully. I think a lot of creators like don't really want to be on chain, right? Like a lot of creators just don't like crypto, period, right? They view it as a scam. And so I guess like the question is, how do we, if we want this user behavior that clearly doesn't exist right now, what's the best method of getting there? And maybe it will just be something that is painful and maybe it tries to be forced and it doesn't happen and then it kind of comes back and whatever. Like we've been talking about this shit forever, right? Like the whole kind of creator coins. So yeah, well, I don't know. We'll see.
I'll give my like 30 seconds or 2 cents on why I think content coins are dumb from like a first principle standpoint. Come and be bearish. But like I think if you're bullish content coins, like you're basically making two fundamental bets. Like the first one is by creating a financial asset, we're creating a new marketplace that enhances the creation and discoverability of content itself. I think that's just completely false. Like content creation and consumption right now, like on Twitter, on YouTube, is one of the freest markets out there. Anyone can make that content. Anyone can find and watch that content. We don't need incentivizing, like how that interaction happens. So bearish that use case. And then the second one would be, okay, we're like tokenizing this content and that's unlocking some new value that wasn't previously accessible, but is real and isn't speculation. And I just don't think that's necessarily true. Like I made a joke, like if we tokenized every single digital piece of content in the world, I bet the market cap would be under $100 of all of them. Like I just don't think that there's new value to be there. Like I could be proven wrong, and like that's kind of the fun of the experiment, but overall not really seeing it.
No, I agree with you. I 100% agree with that. Like I think it is all going to be like speculative action. And yeah, I mean, I think like discovering the real like value of these things, like what is the speculative value of these things? Like, yeah, it might be under $100 because it's just free to go on Twitter and like doesn't matter. I think like kind of like thinking that this is a massive unlock is probably, from my perspective, not the way to view it. But you could potentially view it as like an alternative stream for creators where they can make like some coffee money on the side, like if people really like their content, almost more in like a like tipping sort of sense than anything else. So I don't know. I think there can be positive outcomes for this, but I 100% agree with you that like this is speculative, right? Like that's why you buy meme coins, is because like you think someone else is going to buy it from you higher. Like,
yeah, piggybacking on what Kinji said, like I feel like Twitter is actually a prime example of like why monetizing content leads to like not unforeseen. Actually, it's like pretty predictable that like, you know, the pieces of content that get the most engagement are just like the shittiest. It's like the political stuff. It's like the rage bait. It's like violence. Like, you know, just people knowing that they're gonna get like a paycheck for engagement. Like it actually just has these like insidious effect of creating more content that people probably don't want on their feeds, but now they're getting a lot more of. So maybe like broadly, I think it's good to like add incentives to things, but it should be targeted. And I think some use cases, it's just like you get these consequences that you actually don't want. And maybe certain forms of content, like tweets, probably not great for it. I feel like a lot of people have been complaining about just their feeds getting worse over time. Art, do we not have enough art? I don't know. If that, yeah, it's hard to say. Like even like among different protocols where like, you know, in AI, they're trying to monetize new models, and it's like it's unclear for some of these use cases whether just slapping on some incentives is like a good idea or not.
Yeah, no, I mean, that's a good point. I didn't think about it from that perspective, but there could be perverse incentives that arise from that. It's kind of like, it's like the pump.fun stream thing, right? Like that was not great, right? I think we can all agree on that. So yeah, I think I'd have to think about it a little bit more, but I think that's a super valid take.
Yeah, I'm hearing a lot of the same like reasons why like my parents were calling me stupid for buying an NFT of a rock back in 2021 and 2022, and like it's almost the same reasons for why NFTs were bad. And so I don't like, it's all just in the same vein of if NFTs had no value, content coins, meme coins, it's all the same thing. We all kind of know they're all meme coins and there is no value, but it's all just the speculative issue around it. And so that's where I was like, if they want to lean into the whole on-chain thing, why not just post an NFT of the platform? I don't know how Zora works down behind deep in the weeds and in the actual infra behind Zora, but that's also like, why attach a coin, whatever you want to call that type of coin, but why attach a coin to that piece of content when we already have the infrastructure out there to post real content on chain through NFTs? And that's where the difference, when you add like a coin that can speculate to it, that's where you fall into the trap of what crypto Twitter really bit on with all these coin, or with all this launch of this Zora platform and all these creator coins.
We could do REV, we could do stables, we could do order books, we could do summer plans, NBA playoffs, whatever we're feeling.
Do you want to go to stables, or do you just want to go into NBA playoffs and then have Sonny show Monopoly and then call it?
I feel like we should do something that's fun and bullish. Maybe MegaETH.
Yeah,
Order books?
I like it.
Good one. I like it.
Let's just do MegaETH. So I'm not ranting, but
You want me to ask you a question?
yeah. So no, I could tee it off. I think like moving on to like a more fun topic that I think we are all pretty bullish on is the continuation of the MegaETH testnet. And you know, they actually just released a game today, which is basically just Crossy Road, if you know what that game is. But they have it split across 3 different testnets for Monad, Base, and MegaETH, and you can try the game on each chain. I believe that the transactions are actually happening on each chain, although I'm not 100% sure. But basically, like, you're trying to move and avoid all these moving cars, and every move is a transaction. And the transactions on MegaETH are actually occurring on the MegaETH testnet. And if your transaction times out or it takes too long, you are unable to move, and you'll end up getting squashed by one of these moving cars. And I can tell you that my score on MegaETH testnet is a lot higher than the ones I've been able to get on Monad and Base. And so, yeah, there are all these exciting applications now. You know, Noise, which we talked about in our last call, getting some more traction on Twitter. I've been harping on GTE for a while, but I think this is just something that we needed. We're like, here's an infrastructure-driven project that is delivering real real drastic changes and improvements and innovations to what we could do on blockchains to try to bring net new applications on chain and hopefully bring net new users on chain. And I think it's all pretty impressive. Yeah, don't know if you guys have been messing around or have any thoughts.
It's actually really funny because Matt, I don't know if you remember, but we were talking about Gunzilla and like Off the Grid one time, and we were like, "Man, how cool would it be if you could put like every single bullet on chain, right? Like every single hit." And we were just like, "There's no way to do that. Like it just could never happen." But I think now we're starting to see this like high performance where those things that we just could never possibly imagine on chain actually can be possible now.
I think I got 72 on the Fluffle crossing thing. Pretty proud of it. But what was I going to say? I had a thought and I just derailed myself. I think it's
72 on MegaETH.
Yeah.
Try getting it on base or monad. That's the real. Everyone's posting their MegaETH scores. I want to see some monad scores.
I think like part of MegaETH that I'm also excited about isn't like necessarily directly related to MegaETH, but it pushes the frontier of what we need for a chain. Or what we desire. So you're already seeing Base talk about scaling like significantly more throughput. I think that's partially in response to MegaETH. Solana also, like they've always been pushing to increase speed up their chain. So not much of a change there, but kind of a continuation of the trend. And it just means that the next thing is going to be even more performant. So like bullish MegaETH, but also bullish that the bar for competition has been raised a lot.
Yeah, I think Base was talking about bringing block times, or Jesse was talking about bringing block times on Base back down to like 200 milliseconds, which is faster than Solana is currently. I think Solana's at 400 milliseconds right now. And so, yeah, I'll let you go on, Chris, but I definitely agree with Kinji. I think there's been an acceleration across the board to try to get off your hands and actually innovate on this stuff.
Yeah, this reminds me of a tweet that Hasib posted a couple of days ago where he was kind of like defending the infrastructure investment, right? And I think he made a pretty decent point, which is like, you look at Web 2 and, kind of like other things, it's like infrastructure is like constantly getting improved on, right? Like if you just kind of like say, okay, this is good enough at any point of emerging technology, it's like, well, maybe not, right? Like, are we unlocking new use cases? Like, is there something we actually need more speed for? And I think that MegaETH is probably the first time that we've seen in a while that, okay, this actually does make sense to have better infrastructure.
Yeah, just to dive a little bit into why I'm so bullish on MegaETH in particular is because they've made it's not just like the actual quote unquote tech of the chain. They've made significant design choices and significant trade-offs that I think for the time being will basically place them on the frontier of performance, of real-time performance within all blockchains going forward, as long as they continuously scale their hardware. And I mean, without getting into the nitty-gritty, we have a few reports on this on our website, but by removing global consensus out of the critical path, you don't have to wait, one, for data to propagate across all these different globally distributed validators. You also don't have to wait for consensus or finality to actually be achieved. And so the inputs and the outputs of how a transaction actually happens, which is just the information is sent to the validator or to the sequencer processes the transaction, and the data is sent back to the user. That is exactly how Web2 systems work. That's how Netflix works. That's how Facebook works. That's how Binance works. And so you are now at a place where you can work towards achieving performance parity with Web2. And that's really exciting because that's something that we just never had in crypto. We were always, multiple times slower than our Web2 alternatives. And for the first time ever, we've created this blockchain that can legitimately claim to be a real-time blockchain. And yeah, I'm excited. Something to be said there too about L2s and like the fact that ETH has been able to enable this with its rollup centric strategy. Although MegaETH isn't technically a rollup since it posts data to EigenLayer. But I mean, we're seeing some of these like things that we've just kind of theorized about over the past few years come into fruition. And, hopefully mainnet comes soon and we'll be able to see this stuff in action and be able to put, real money on the line and buy some real tokens and play around. But right now, like from everything that I'm seeing in testnet, just very, very impressed.
Yeah, kind of picking off what Chris was saying about the tech infra, like just improving. And we would have stopped at regression, and we would never had an AI if we just stopped with y equals mx plus b, didn't find out machine learning, and now we have AI, and obviously we've seen how impactful that could be in our lives. And so obviously infra is always gonna, as just history repeats itself, we're always going to see infra get better and better. What I'm excited about MegaETH is I probably lean more towards the monad side, just because I like the team, close with the team, know some people over there, and know more about it. But what I'm excited about MegaETH is kind of, we're going to see the answer, or see where the people like, and what do we think about decentralization, and like, does that actually matter? We kind of saw that with Hyperliquid, where when it was just when it wasn't decentralized at all, and everyone was making the jokes about the L3 on Arbitrum and everything, and there might have been a little truth to it, but now they've decentralized a little bit more, and we're seeing MegaETH kind of take that next step forward and say, hey, only performance. And then you were also mentioning this other L2 order book that's even sacrificing decentralization for even more performance. I forget the name of it. If you want to chime in on that other L2.
I think you're talking about Lighter XYZ. I wouldn't say it's necessarily sacrificing decentralization, but they're bringing off-chain components into their order book to try to make it even more performant order book.
You know what's interesting is that I've seen this in a few other projects too. So like Nillion, they have an off-chain part where the actual compute is happening. And then they have on-chain, which is kind of like running the network. And I don't know if they do a proof back to it or not, but I think maybe this is going to be an architecture that we start to see a little bit more of, as we have things that are more computationally heavy being done off-chain and then verified on-chain.
Yeah, I mean, I'm not a huge fan of like these hybrid models. I prefer everything to be on-chain. But again, that's kind of they're like opaque limitations of like vulnerability and transparency, and some of it is philosophical. But I think the point is now, like, we have an array of options to choose from as users, like more and more like shifting to Overton window towards like just build anything that you can possibly build with the trade-offs that you want, until we end up concentrating on maybe a few select winners that will eventually pan out. But yeah, like we're kind of seeing like I don't know, Lighter just reminds me of like Final Form DYDX. It's just like it's kind of the same foundational idea, but just executed really well with a really cracked team. And so excited for that too. But then you're going to have GTE run on a MegaETH with a centralized sequencer. You're going to have these options that are maybe even more centralized than Hyperliquid, and people are going to make their own personal choices about where they want to trade and where they want to be. But it's exciting that we have like some really performant options to choose from, instead of just kind of settling for something that's not as good as what we could have elsewhere, but was good enough. Like now we're seeing some like truly comparable ecosystems that we can take part of.
Thanks, guys. That's going to be all for it today, and looking forward to seeing the future get more on these performant chains, and hopefully in the long run we'll stop becoming macro investors and we can stick to what we're good at, and playing on test nets and playing in the crypto land, as we all know and love. And so thank you guys for sticking with us. That's it for Shoot the Shit Pod episode 3. Looking forward to episode 4 here in a couple weeks. Thanks, guys.